Welcome back. I'm Pratap here. Today is the 28th August 2024. In this video, let us evaluate the performance of a high liquidity zone generated from our previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel, click on this posts tab and then you get access to this post. This post is having a YouTube playlist link that will take you to all the training videos. So I'm clicking on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. And so far we have completed 24 training lessons. From these 24 training lessons, we have 62 training videos are available. So you need to access from the first video. So for that, please scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this YouTube video description. So from the video description, please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important updates, we'll provide at our Telegram channel. Now let's get into the analysis of the high liquidity zones generated in our previous report. Yesterday we identified 6 high liquidity zones from daily time frame and 75 minutes time frame. Out of these 6, we got only one trade and it is a successful trade from the stock sale, Steel Authority of India Limited. And this is a 75 minutes high liquidity zone. We have a rally candle, 2 base candles and a rally candle. Rally base rally. And this rally base rally we fine tuned with 15 minutes time frame. So in the 15 minutes time frame here we have an excellent drop, 2 base candles and a rally candle. Drop base rally. This drop base rally again fine tuned with 5 minutes time frame. So in the 5 minutes time frame again you have a leg in as a rally candle, you have 3 base candles and a rally candle and a very good follow through candles. So here we have the strong institutional order flow is available. So this is the area where you should plan your trade. And what about the target zone, the 15 minutes target zone? So this is the 15 minutes target zone. You have a drop candle, you have base candles and again a drop and follow through candle. This is the target zone. Sometimes you know what you can do, you can fine tune this even 15 minutes to identify exact target point of view. That is what I did in this today to achieve the RR. So here you have a ERC candle and then we have one base candle and drop candle, follow through candle. And also previously prices went up to this area. Probably next time prices will go up to this 5 minutes area. That is what happened today. Maybe you may exit a little before. That possibility is also there. It's up to you. But what is the maximum opportunity this stock has given? That is what I'm calculating. From this opportunity, how much profit actually you took, that is up to you, where you take the entry and where you exited before getting to. But this is the maximum opportunity our high liquidity zone has given. So this is the entry and this is the target. And you have 1:3.54 RR is there. You can say 1:3.5 RR we are getting in this stock. By taking some entry buffer and by keeping some stop buffer, we achieved this RR. And today we got the entry just a little, few paisa before this. The exact entry could be 134.41 paisa and the price today it reached 134.42 paisa, just 1 paisa. If you would have kept 1 paisa or 2 paisa before your entry, you would have got the trade. Generally we keep some stop buffer. You would have kept up to 3 paisa, you would have kept that stop buffer. Okay. And this is the target. We have 3.4. And today at 11:30 candle it reached the zone, we got the entry, and after that it reached the target at 12:40, 12 o'clock 40. So within 1 hour 10 minutes it reached the target. Close to 1 hour it reached the target, and the profit you got is sale 3,960 rupees, close to 4,000 rupees, but okay, 3,960 rupees is the profit based on one future slot. And what about ROA? Return on the investment is only 1.7%. ROA you got. And this is the least ROA we got so far. Actually, we got 2 trades during this month that gave very least ROA. Sale is the one, and few days back we also got, on 26th. Today is 28th, right? Wednesday. On 26th, Monday also, BEL, that has given a very least ROA. So this time the government sectors are having their ROA is very small. Generally the momentum in those stocks are very slow this time. That is what happened to BL, and today that is what happened to SAIL. But anyway, profit is a profit. Whether it is small or maybe we failed to achieving 6% ROA. We can't do because we have a 15-minute zone is there. After exactly reaching 1:3 RR, we have a 15-minute zone. That is one reason. Second reason why we got less ROA is the margin cost. The futures margin cost for sale is something close to 2,20,000 or a little more. This is one of the reasons why our ROA is reduced. But anyway, we got the profit. It is a successful trade. Even though your profit is 3,960 rupees for an investment of 2,20,000 rupees, but still it is a profit. That is what you have to understand. It is a successful trade. This is a successful trade. This is the only one stock we got the trade today, and remaining stocks we didn't get any trade. And after that it reached this zone. Again this zone is pushed because today supply is very strong in sale, and once again it reached the 15 minutes. Generally you can take second trade also, many times we take, but this stock is at 2 o'clock 25 minutes. That means almost last 1 hour of the closing session. Last 1 hour of the closing session, mostly we don't take intraday trades, but still if anybody wants to take, I already suggested you have to go for only 5 minutes target, not 15 minutes target. This is the 5 minutes target. You have a drop, 3 base candles and a drop. And if you want to take a trade, you don't have the ROI. ROI is not there. This could have been your target, but ROI is not there. That's why rejected. And after that again it pushed, but slightly before, a little before, again it turned back, and finally this entire zone is violated. Anyway, you can't take a trade because ROI is not there. You will get only 1:1 RR you will get from here to here, or a little over 1:1 RR. So that's why it's not a valid trade for 5 minutes target. RR is not available. Even then it failed to reach up to this. And finally it pushed to some extent because because today supply is very strong, so it couldn't able to push up to this 5 minutes or even next 15 minutes. The reason is this is the last 1 hour of the trading session. The last 1 hour of the trading session, the momentum may not be in your favor many times. Sometimes it is favor. That's why we are keeping a 5 minutes zone as a target. But 5 minute zone we are not achieving the RR. That's why we rejected the trade. After that again it turned back, and then finally during the last 15 minutes this entire zone is violated. The high liquidity zone is violated. The last 15 minutes of the trading session. But we got a successful trade. Till the 15-minute zone we got a successful trade at 11 o'clock 30 minutes. and 12 o'clock 40 minutes it reached the target. So as I already told you, it is 1.7 ROI. This is about sale. And remaining stocks, how I fine-tuned, let me explain quickly. Let's start with the Titan. Titan is a daily high liquidity demand zone. So this is a rally candle, and then you have 1, 2, 3, 4 base candles and a rally candle. This is how our software identified. This I fine-tuned with 75 minutes time frame. So here we have a 75 minute zone, rally, 2 base candles. This is a medium size leg candle. So sometimes medium size leg candle also can be part of the zone. That's why I have drawn rally, 3 candles as part of the base, 2 base candles, 1 medium size candle. And after that you have a very good leg out. So that's why rally, base, rally. That is what we have drawn. And also another zone also we have a rally, 1, 2, 3 base candles. Actually these are 1, 2 base candles. This is the third one is again medium size candle. Medium size candle also part of the base. Please remember, medium size candle also can be part of the base only when some base candles are available before this candle, and after that leg out candle should be there. In that scenario, before the medium size candle there should be base candles. After the medium size candle there should be a leg candle, leg out candle. So here you have a rally candle, 2 base candles, medium size leg candle. So it is part of the base. After that you have a leg out candle. In that scenario you can draw the zone. I remember yesterday someone asked about this question in one of the videos, training videos. Same point I explained also in the earlier videos also, especially in our training videos I have explained. Medium size leg candle can be part of the base, provided there could be base candles before the medium size leg, and after the medium size leg candle there should be a leg out candle. This is a leg out, ERC candle. This is a ERC, failed ERC. Failed ERC candle, some scenarios you can keep them as a leg out. You have a sufficient body that is pushing the prices away from the zone. See, this is away from the zone. And these prices are closed. The leg out closing price is above the zone. This is another point you have to say. At least some considerable amount the body should be there outside the zone. See here, there is at least a minimum considerable body is there outside the zone. After that the candle should qualify the ERC. See, this entire candle is a ERC. Only thing is it is not having good body. But otherwise it is a ERC candle. Such kind of candles we are considering as a failed ERC candle. You can't use every failed ERC candle as a leg out. Please remember. At least the conditions I told you should satisfy. At least a minimum small portion of the body that should be pushed out of the zone. See here, a minimum portion of the body is pushed out of the zone. In such kind of scenario you can consider. Why we can consider? If you look into the dynamic view. That's why I always previously in one of the Q&A video I told, building dynamic view is very important. At some point of time the body of the candle is up to this much. See, the body reached up to this point. After that prices came down and the body is resulted as a long wick. But otherwise at some point of time you have a very big body. That means at some point of time this is a qualified leg out candle. But it is failed. Even though it is failed, considerable amount of the body is moved out of the zone and finally closed out of the zone. If this body is very close to the zone, probably we would have rejected this zone. Or if this body is closed inside the zone, we would have rejected this zone. But at least a minimum considerable amount of the body is closed outside the zone. I mean outside the base. This is the base. Because the body is closed outside the base, we considered a valid leg out, no problem. So that's why this is a rally base rally with ERC, failed ERC as a leg out. Failed ERC, always remember, failed ERC candle is a very specific scenarios only. If it meets specific criteria only, you have to use that as a leg out. The one important specific criteria is considerable amount. First of all, the candle should qualified as a expanded range candle. This is an expanded range candle, but not having sufficient body because it is a failed ERC. In such kind of situation, a small considerable amount of the body should be pushed out of the zone. See, a considerable, a small pushed out of the zone. So that way, and it is having a long wick, and that indicates a ERC candle. Even though it is failed, body is failed. Maintain. It's failed to maintain the body. Because it is failed to maintain the body, even though it is a ERC candle, failed to maintain the body, we are calling it as failed ERC body. Even though it is failed to maintain the body, but a small amount of sufficient body is moved out of the base. That's why we are calling this ERC as a leg out. No issues. This is a special scenario when you can accept ERC candle. Sometimes the body, you have a long wick, body will be here in the middle. There also you can accept. But always remember, the body of the candle is not very close. The closing of the body not very close to the zone or inside the zone. At least a small amount, considerable, good enough, pushed out of the zone, at least up to here. Okay, we are recognizing the body, and the candle itself is a very big candle, ERC candle. So no problem in considering. These are the special scenarios about ERC candle. Anyway, in one of the training lessons in the upcoming, I will explain all these scenarios about ERC candles, but it will take some time. Meanwhile, let the other people also complete the training courses, whoever is currently attending, so that more people at once can attend all these special scenarios. Okay, this is a 75-minute zones. 2 zones I identified. Out of these 2 75-minute zone, I again fine-tuned with 15 minutes time frame. See, here you have a rally candle. You have 1, 2, 3, 4, 5 base candles. Again a rally candle. Rally, base, rally. So the lowest among this candle is here, highest among the candle. So we have drawn the 15-minute zone. This is the 15-minute zone within these 5 candles. Now again here you have a rally, base, rally. So this is excellent. And next 5 minutes, how I fine-tuned. Here you got 2 zones, rally, base, rally, fine-tuned 5-minute zone. Even you can also plan like this, type 3 entry, so that exactly it fit inside the zone. That way also you can plan. If you feel risk is small, you can also plan like this. A little earlier you can take the entry. It's like adding the buffer to the zone. That way you can assume, comparing with this fine-tuned 15-minute zone. And here you have a drop, 2 base candles, a rally candle. Drop, base, rally. So these are the 2 fine-tuned 5-minute zone. And here again you have, within this 15 minutes, you have a rally, 1, 2, 3, 4 base candles and a rally candle. But this zone is already tested. Because it is a tested zone. Whether you can plan a trade is a questionable, but remember here again you have a drop, 2 base candles and a rally candle. What does it indicate? LOTL, level on the top of the level. Generally in high liquidity zone scenarios you may see, I'm not confirming this is a high liquidity, you may see. So because of this drop, base, rally originated from this entire zone, maybe this zone is having some of the high liquidity zone properties. Still we didn't confirm it is high liquidity. So at least because of this reason, we may try one more trade from this zone. Mostly it will result as successful trade. Because already drop, base, rally is there from this zone. We have a drop, 2 base candles, rally. This entire order flow is generated from this zone. So that's why in this zone next time we can plan a trade. So this is what, but anyway today prices did not enter into this zone. We did not get the trade. And the next zone is M&M Finance, Mahindra and Mahindra Finance. This is a daily high liquidity supply zone. When this supply zone is created, see here, this is a ERC candle. So even though it is looking like a failed ERC, but it is also a rally candle you may consider. See, at some point long wick prices are here, and again prices are moving up. That way you can consider prices rallied. And two base candles and a drop candle, rally base drop. This is looking, you may say this is having a red color body. It is not a drop candle, failed ERC, but if you look into the dynamic point of view, this is a rally candle. Our software is having this intelligence. Software is having dynamic view. So that's why based on that it will identify whether it is a rally or a drop, even though their legging is a failed ERC candle. So rally based drop, we have drawn the zone. The upper wick of this is a legging candle, two base candles and a drop. But when this zone was created on 7th July 2023, but the problem is the 5 minutes data is available up to 1st July 2023. Almost 1 month data, 1 month before. This data is not available in TradingView because TradingView will give you only last 1 year data. So narrowly we missed 5 minutes data. That's why, but that 5 minutes data is available in NeoStock software. So that is the reason why yesterday I generated 5 minutes supply demand zone chain for M&M and I have published in our Telegram group. So that those you may draw up to 15 minute zone. The 5 minutes time frame zones you can mark here. You can go to the 15 minutes time frame. In the 15 minutes time frame, whatever the 5 minute zones are there inside, you can mark that. That is what I did here, based on 5 minutes supply demand zone chain. How do we mark? Because in the 5 minutes time frame, you have zone high and zone low. You have type 1 zone high, zone low. You have type 2 zone 1. Zone high and zone low, they are all available. So that you can draw. But how I fine tuned this daily? First fine tuned with 75 minutes time frame. So in the 75 minutes time frame, identify two zones. You have a rally, you have a base candle, you have a drop candle. Again you have a drop, base, drop. So that way you can draw the zone. Then I went to the 15 minutes time frame. In the 15 minutes time frame again, I have drawn the zones. So this is the ERC candle as a legging. You have a base and you have a drop. Drop, base, drop. That way the 15 minute zone is written. And again drop, base, drop also again you have drawn. Drop, base, drop. This is also a valid 15 minute zone. And again here you have ERC candle as a legging, two base candles and a drop candle. These are the 15 minute zone. Then 5 minutes, whatever the report I sent you in the Telegram group, using that we have identified in the 5 minute zone. So whatever the zone high and zone lows are there, exactly I have drawn a zone here with that zone high and zone low. Just how to draw? Just draw a zone, double click. In the coordinates you set the values. Whatever is there in the NeoStock report, 5 minute zones, you just set and click OK. Automatically the zone will be adjusted. Because zone high, zone low is there. Or also you have zone proximal type 2 entry is there. If you don't want zone low, type 2 proximal entry you can enter. That way you can draw the zone. And this is a high liquidity, 5 minutes high liquidity zone as per the report. And also it is having pro gap also. Here also you have a 5 minute zone. Here also you don't have, here you have a 5-minute zone. And this 5-minute zone is a high liquidity zone. See, many times our software itself identified this is a high liquidity zone. In this coordinates, whatever the zone our software is displayed is a high liquidity zone. Within the coordinates, see, because it is high liquidity, how many times it is supporting the zone, how the rejections from this zone. And moreover, this 5-minute zone is also responsible for the creation of this 15-minute zone also. That is a lower time frame zone as an horizon to the higher time frame zone. For all these conditions, our 5-minute supply demand zone chain helped us. And today the plan was to take a trade in this zone. So that was the plan today. But unfortunately, today prices did not enter into this zone. We didn't get a trade. This is today's morning 9:15 candle, 75 minutes candle, and then came down. They didn't go inside the zone. That's why we didn't get a trade. It was down because it is a supply zone. Prices were moving down, but we didn't get the entry. And the next one is SIPLA. SIPLA is a 75 minutes high liquidity demand zone. This is the one. We have a rally, we have 2 base candles, and again a rally. Rally, base, rally. And this I fine-tuned with 15 minutes time frame. So here you have a rally, base, rally. This is the 15-minute zone. Rally, base, rally. And next again fine-tuned with 5 minutes time frame. But 5 minutes time frame, here you have the zone. You have a drop candle, you have 2 base candles and a rally candle. After that prices came down and again moved up. Again drop, base, rally. Within the same zone, again a drop, base, rally is created. And again a drop, base, rally is created. Probably this could be a high liquidity area. Not only that, this lower time frame zone is also an horizon to the high liquidity zone, the 75 minutes high liquidity zone. The entire 75 minutes high liquidity zone is picked up the orders from this 15-minute zone and then see the move, how it is started. So that is the reason why we want to plan a trade in this area, in this zone. This is also a fine-tuned zone at the distal line, and a part of the zone came below the distal line. But that is the horizon for this entire zone. So it picked up the orders from this area and moved up. So that way you can plan a trade in this 5-minute zone. 5-minute zone as an horizon to this entire high liquidity zone. But today prices did not enter. The prices moved up and we didn't get a trade. Next one is sale, we already discussed, and next one is Fin Nifty. Nifty Financial Services is a Fin Nifty. It is there in F&O, and F&O it is listed, and it is a 75 minutes high liquidity supply zone. How we have drawn 75 minutes high liquidity zone? Here you have a rally candle, you have 1, 2, 3, 4 base candles, and then again a drop candle. This is the zone identified. And recently prices came and again came down. Here we identified the fine-tuned zone. So let me go to the 15 minutes time frame. Within this area we don't have any proper 15-minute zone here. We have a drop candle and a drop candle. There is no 15-minute zone. But here in the recently prices entered into the zone in 29th July. At the time a rally base drop is created in 15 minutes time frame. So this is a fine-tuned 15-minute zone inside 75 minutes high liquidity zone. And this 15 minutes again fine-tuned with 5 minutes time frame. Now we are in the 5 minutes time frame. So here we have a 5-minute zone. We have a rally, 1, 2, 3 base candles and a drop candle and then follow through candles. So this is the fine-tuned 5-minute zone. So here we planned a trade, but today today prices went up to here, came down, and again moved up and came down. So we didn't get any entry in the zone today. This is today's price movement. So that's why we didn't get an entry in Fin Nifty, that is Nifty Financial Services. And the last one is the SRF. This is also a daily high liquidity 75 minute supply zone. These are the earlier zones, daily zones. But our high liquidity zone identified by our software is this is the one. We have a rally, we have two base candles, we have a drop candle. Here I have seen some problem in the trading view. Compare it to the data in my database. This candle, my database is showing up to here. So the high of this zone is 2592.20. This is the high of the zone according to my database. But according to the trading view, this is the high of the zone. Next candle. If that is the case, this zone is already pierced yesterday itself. Our software should not display this. Because this candle is having high up to here, but trading view is showing as a short candle, but I don't know what happened. But anyway, let me change the high of the candle, 2592. I just adjusted this. In trading view up to here I added. How do I know high of this? This is the high of the candle, but 75 minutes, the zone data, whatever the report I displayed, you have to see, look into zone high and zone low. The zone high is showing up to here. So that is the reason why I have drawn the zone up to here. And this is yesterday's candle. Yesterday it went up to 2592. But this candle, according to my database, 2592 20 paisa. So it went below 20 paisa and then came down. That's why this zone is still valid zone. But I don't know. Trading view data is perfect or my data is perfect. But whatever it is, I looked into the price action. We have a fine-tuned zone. So here we have a fine-tuned zone, rally, base, drop. Excellent, rally, base, drop. This again fine-tuned with 5 minutes time frame. We have a drop, base, drop. So I have fine-tuned. Earlier prices also came here, came down. So that means there is some rejections from see the rejection prices are moving below before entering into this zone. That means order flow might be strong. Next time we add some entry buffer and we keep a trade. We will plan for a trade. But today unfortunately prices didn't go up to here. Today morning 9:15 candle prices reached up to here. They didn't reach. You can't even add even if you add the entry buffer, still you won't get the trade. Your entry buffer might be somewhere here. 0.1% maximum you will use. Even type 2 entry also, drop, base, drop, type 2 entry also, if you add the entry buffer, maybe up to here, somewhere up to here. Not till this here. Definitely, you would not have taken a trade. Maybe the order flow is very strong in this area. See the rejection, how prices came down and moved down. If it would have gone a little up, further up to here, we would have got a trade in this stock. But anyway, we missed it because prices didn't reach this zone, fine-tuned zone. So this is the only one important observation you have to observe, the data mismatch between my data and trading view data. But I am believing my data, that's why I have drawn the zone up to the 75-minute zone. I have drawn up to this area, 2592.20. Okay, this is about how we fine-tune the remaining zones, and we got only one trade today, sale. That is a successful trade and achieved 1:3 RR, 1:3.5 RR. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.